The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Wednesday, October the 28th. Wrapping up October. What a month. What a month. And I just recalled this morning that it was this time last year where I was talking about if the market closes very well in October, my experience was that it was rare for there to be a sell-off, and that very often going into December, you could close December and close the year at the yearly high. That's happened often enough. So this is a very important session, and there are a couple of reasons why. Can the Fed change policy here? Can they start the incremental move higher? What would be their reasoning? Well, the reasoning that they want to use is they like to look at the home building sector. They like to look at, I think they also like to look at the general market. Well, yeah, you are. Just, 500? It's 500 or 600 points off the all-time high in the Dow, and pretty close in the S&P to the all-time highs. If ever there was a time, this has got nothing to do with the market per se, but if ever there was a time based on the number of points that the market could go down in, it wouldn't be a surprise factor on one hand because they've spoken about it enough, but it would be a surprise factor if they actually did it. So let's just say it's 10%. Well, 10%, 1,700 points, is just not a big deal at this stage. And then it starts to self-correct, and it realizes that maybe it's one time and it could be a long time before the next raise. So it's really important. Now, the work that I had done over the weekend, which didn't change the fact that on a very short-term basis, we were looking on the short side. We got a mixed portfolio, long and short. But what's really important about this particular phase is that look at the S&P, the futures. The futures are up 12 at 2072. 2,118 was the double top high. That started off in June, the week of the 22nd. So we've had June. So let's go July, August, September, past mid-October. So that's over 4 months, within which you had a major correction from 2,118.50 to 1823, a very strong bounce over the 200-period moving average at 1999, and then the futures come back down to the 1861 Freeman low, round number low, and then starts a spectacular move to the upside. So now this at 2,072, just 30 points. That's 300 points. That's 30 points in the S&P, 30 points in the E-minis of that previous high. What we were looking at, what I was looking at, was that this week should see at the beginning of the week at least some weakness. And now we're into the area where the 120-minute chart is made, just like you had that 21,1850 double top high in June and then again in July. So now you've just got the double top of 2074.50 made on the 23rd, and we retested it. We went to 2074, 75, 25 cents higher. The higher makes a difference because the stochastics at 90% and the MACD is good. So what my analysis was that this has been a spectacular move to the upside in the time because it made a V-shaped recovery. So as I do the numbers now, let me go right through the numbers and I'll talk out loud, just as if I was thinking, as if this is now my office and now I'm going through the numbers. So here we go, the Dow, INDU, with a chart. I've got all 4 time frames. You've got a brand new recovery high to leg F. Now, this is really very interesting. This is the strictest construct that I could have, that it's an F, because I took the peak C from 16,933, treated the decline to 15,942 as just one of those declines, and the very next high bar above 16,933 started leg D. This is very strict. This is a strict way of doing the Chapman wave. There's another way that said that and I've been talking about this for a while, that the move up in the MACD and the stochastic was so powerful that it generated a move in the daily chart of the Dow. Let me quickly go to the daily chart here. The daily chart of the Dow, with just one ugly, sharp down candle, that black candle right there. Otherwise, out of, now we've got to count it again, right? 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29. Out of 29 sessions, you've had only one ugly down close, one reasonably down, look at that candle. If that was red, I usually use red. That would be just a nominally, it didn't even take out the previous day's low, but it is a red candle. So out of all of these, you've had many dojis, hesitant bars, but look at the power. So when we went short, which at this particular time, I think we are still short. I don't want to talk out of turn. So, yeah, we're still short. Just the Dow, thinking that it would be a pullback, and it will be a pullback going to the Fed speak. Now let me talk about the only negative I can see right now with the stochastic at 94% is that the stochastic did tip negatively, but it's still at 94%. And the MACD hasn't really even started to cross down, to turn down in the fast-moving average, 9-period differential. But you can see that the histogram has got slightly lower highs, but it's still very strong. These little green lines over there. Okay, so that says that if the Fed does something today, let's just say that the Fed says they're not going to do anything, but they're going to be watching November or December, let's say December really closely. And there's a good chance that in December they might do something. I'm just repeating verbatim what they keep saying over and over again. Well, there's a chance that the market might be disappointed only to the extent that it's talking about weakness still being generated in the economy. And that might see the market say, you know what, this is not such a great sign, and it might pull back. If they raise rates, then I think you would see a pullback. You get this real sharp, sudden move down. Bonds would slide, yields would go up, and probably, at least in the beginning, you would see dividend stocks probably hold well, and all the others start to pull back. This is kind of the way it's looking right now, that if they were to raise rates, or even very strongly say that they're absolutely going to do it. But in the meantime, this is very good action. Why? Because today, if there's a close above the 9-period moving average of 17,447, that would mark 1, 2, 3, 4, 5 sessions above the 200-period exponential moving average. The 9-period moving average has crossed positive, so you've got a positive cross here, which says on the short term, one of the reasons why I thought it would be a little bit weaker is that on the short term you could pull back, but you're starting to generate tremendous support in the 17,200s more intermediate term. Okay, so that's the Dow. The parameters are real clear. A close in the next 2 days in the Dow below 17,400 would signal that you're going to get that test of the 200-period moving average of 17,295. That's going to be very important. On the positive side, I've got a left side, right side price time match, which comes in exactly tomorrow, Thursday, Friday, on Friday. And that says that there could be a price time match. You've already done it in the Dow on the shorter term. In this chart here, you already did that match to a different price time level. And that's suggesting that if we go back to the chart, 17,783 is the next level of resistance. And that could take you until Friday. So that's the upside and that's the downside. Stochastic's at 94%. MACD is at 206. I didn't expect, I thought this little M-shaped pattern here was going to start a pullback. We haven't done that. So now I have to look at the bigger picture. And the weekly chart is saying, I'm coming up to resistance, and that's the dashed line resistance at about 17,740. That's number one. Number two, the MACD histogram is now positive, and the MACD has got a very nice price movement. You see that white space between the 9-period differential right there, and the slower moving average, the 26-period moving average. Well, look at this. That space up is very strong. It gives you a lot of support on the downside, which makes around about that 17,400s and then 17,200s very strong support. 17,139 is the 9-period moving average support. So here I am giving you a much stronger bias towards the upside, which is really more going to be my intermediate term. I was hoping for a pullback to actually start positions, a whole bunch of other positions on the upside based on how well my Dow Quartet has done, etc. So that resistance, that dashed line resistance, is going to be very important, because a close by Friday or Monday, anywhere close to the 17,850 level, it's just going to be, it's really going to be important. And it's going to say, you know what, that whole aberration of August the 24th, that slide to the downside, that was just a bump in the way with the dash trend line holding so well. In the monthly chart actually looks quite good, not technically, but price-wise. The 120-minute chart is just recycled to maybe a C. I don't know, have we got enough time to go to a D? No, I don't think we have enough time, unless we pull back, waiting for the Fed, and then after the Fed, it spikes again. So this is very important, a very important moment for me in the way I'm looking, I'm perceiving the intermediate term. In the S&P, if I'm very strict about this, that would be a D. This could recycle to an A, B, and we're in C, but it could be a G/C. Meantime, the MACD is good and the stochastics at 92%. That is really nice action. And on the this arch formation is extended higher and higher and higher. So we'll put it up here. And if you're looking at there isn't a trend line like with the Dow. To show you where the resistance is. All I can say is the resistance will be this bar right here on the week of the 21st of August at 2103s, right in the 2103s, and we're at 2078. So let's go, and the weekly chart, look at the way the V-shaped pattern has been expanding. This is good action right now. And the 120-minute chart has gone to an AB. It's actually in D right now. And you see the October low of the S&P, we had confusing signals only because the Dow broke the October low, the S&P didn't break it, and the NYSE and the IWM were looking very poor, but QQQs, as I said the other day, are acting extremely well. So here we are. Here's the 2078 level. 2134 was the high that we looked at for a peak, G/C. So as I'm looking at this, I'm saying the weight of evidence thus far is really towards the upside. There's going to have to be some really big disappointment. So you've got the Dow up 101, S&P is up 14, comp index is up 30, gold is up 14, silver's up, crude oil is up 2, and bonds are down 27 30 seconds, and the dollar was slightly lower. I'll be back straight off these messages.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So in sum, the buys that I've had here in looking at the charts is saying that dependent on what happens this week, this is the spectacular moves on the rebound in a V-shaped pattern in the weekly charts is going to get the severe tested over the last few days of resistance. And if by the end of the day, we just suddenly see the Fed just gives up and says, we're not doing anything right now, and the market jumps another 100 points up in the Dow, another, say, 12 points up in the S&P, we've broken out, and I don't know what it'll take to really smash the market down to the August 24th lows. I think this could, in fact, be an internal low that doesn't have more than that H pattern for the residual low. Let's go to Jennifer in Wellesley, Mass. Jennifer, how are you?
Fine, Basil. I spoke with you last week about Visa.
Right. Yes.
And made a mistake. It wasn't reporting today. It's actually going to be reporting on Monday before the bell. And I'm just wondering when, what I should do, when I should get out.
Okay. I looked at this over the weekend, and then I looked at it again last night. And then as I looked at it, I said, oh, that's right. Monday, Jennifer was going to call, and we've got a peak D, but it's holding really well. MACD is good. Stochastic is good. I hope she's still in it. You know what I'm going to recommend? Because what happens today with the interest rates could be a big factor in the interpretation for the credit card companies do different things, and they are some are just facilitators, and others have greater involvement in the actual transaction. I think if I'm correct, Visa is really just a facilitator. It just goes right through, and they take a cut. And then, if I'm correct, I mean that's kind of what the chart is looking at, as if it's in a almost like a royalty business. So I'm really reluctant, unless the Fed does something today, and the next thing, all of a sudden, before the earnings report, Visa in leg E has a sharper turn down and takes out the low of the candle that we were looking at the other day of 74.95, and then holds under that for about 4 or 5 sessions. So an entire week goes by, and it's starting to now test going towards the 74.35 9-period moving average in the weekly chart. I would love to be able to think that this is really a foreteller of a successful sector stock that is telling us about the outlook going into the end of the year. So that I would like to think of it as an intermediate term to almost a long-term buy and hold. Now, that would be perfect, but we've got to look at levels to watch to monitor it. So the way I'm going to look at it here is that if it starts to close under 76.50, that would say be a little careful. There could be a big pop-up. That's Monday, you said, was earnings, right?
Correct. Before the bell.
We've got only 2 sessions to go, 2.5. We've got the rest of the day, and we've got tomorrow and the next day, and then comes Monday.
Yeah. Now,
okay.
Visa,
Yes.
when American Express lost the Costco account, Visa was the cardholder that picked it up.
You're right.
Which, I think is very positive for them.
It really looks like it. I as you said that, I remember actually reading about that over the weekend to remind myself, and I had forgotten until you just mentioned it now. If you're looking at MasterCard is also doing well. It hasn't gone to this leg D. It should still do it, going just a tad higher to 99.94 for leg D. But when I look at the weekly charts, there are a couple of weekly charts that I was looking at. We have a particular stock in the portfolio for my subscribers, stock that, so far today is doing really very nicely. And since we bought it on a percentage basis, it's up very nicely. But the only way that I could count the Chapman Wave weekly chart was to say, absolutely, it looks like a leg B. I don't have any other way of describing what I'm looking at. And I'm looking at 98.82, 98. Oh, my goodness. So that's G. So even MasterCard, if I have to be very strict about the Chapman Wave methodology, this looks like brand new weekly. Let me just look at Visa again. So that means that Visa could be also in the same category. Wow, this is so tough, because I would hate for you to get out of this, and then all of a sudden in 3 weeks' time we're looking at Visa trading at 83, because if it breaks out into the 80s in the next 3 days, then all of a sudden we're looking at an extension. Chapman Wave 38% extension in the monthly chart that takes you to 81.32. Can you hold on? I need a few minutes. I want to just think this through so that I can try to give you the best way of handling it right now. Could you hold on?
Sure.
Okay, thank you. We got Jennifer in Wellesley, Mass. Holding on. We're looking at Visa. Dow's up 102. S&P's up 13. And I'll be right back straight off these messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with Jennifer in Wellesley. Jennifer, I forgot to ask you, what's your average cost on Visa?
I'm in at 76.
Okay, so you're in at 76, so that doesn't give you that leeway. If we're going to say 74, I'd have a much better time. See, what I was thinking is this. If at 76 to get out for a 2-point gain, I mean, that's nice. A gain is a gain. There's nothing wrong with that. But if we're looking at this is why my thinking, if you were in it 74 or lower, I'd forgotten what the entry price was. But if the average cost was under 74, then I would say to you, I would take something off right now, and I dedicate that exact amount to be put back if there is a slide back into the 75, maybe the 74 area, and based on the technicals, but that money wouldn't be used because that's where it's going to go, unless you decide when it gets there that this is really not the time to be putting it in there. Because if you take something off, then what you've done is you've given yourself a nice cushion, and if it explodes to the upside, you're still in it. And now you know that if it explodes to the upside, you do want to get into it. And your price will have to be somewhere around the 2 points higher, like in the 76s, to be putting money back. At 2 points, it's a little tricky because it could wiggle 2 points at $78. It could do that by the end of the day or by tomorrow, and not really. In 3 days' time, it could be back at 78. And we're saying, oh, wait a minute. Did we just get out? Now what do? You got out. You know what I'm saying?
Yes.
So this is a little difficult. You would like this to be a more long term. Is that correct?
Well, I'd like to take some profit from it, either before or right after
Yes.
earnings. I think long term, it's a great stock to hold, and I think it would probably go back down sometime after earnings. And
Okay, so you just answered. You see, this is what I like about. I always say that when people call up, there's very often a thinking that's going on in the back of their head that they haven't maybe articulated, or maybe they need a little a booster. You just articulated exactly what you probably should be doing. Take something off right now. It's only 2 points. You would like it to have been 3 or 4 points, but it is 2 points. Something's going to happen later today that could affect it negatively or positively. We just don't know. As it stands right now, the market is interpreting that there could be good action to come. This is really a good looking. The stochastics at 89% in the weekly. The daily stochastics at 91%. The MACD is improving tremendously in the weekly. MACD in the daily is just a little toppy, but still acting very well. The monthly chart really looks good. So I'm hesitant to say, get out and you can get back in at 74. I mean, what happens if it jumps to 81 by Friday or Monday? Then you're out. You're done.
Yeah.
You don't want to chase it. So I'd like you to keep, you know what? I think that you answered the question. Take a little bit off. Now what you've done is you've rewarded yourself for a nice move up. Not many people were expecting stocks like Visa to be acting as well as it is. You're in the stock. You've done very nicely. It survived a couple of little whipsaws up and down. But the idea is that maybe that money should be dedicated to going back into the stock. And now what you're saying is, I'm going to take it off at 78, and I hope I can buy it back again towards the 75 level, because I'm anticipating it's going to go to the 80s within the next couple of weeks. That's the thinking that I would have. I don't think that this is going to top out right now. Something very drastic would have to happen. First of all, it's going up with low interest rates. And secondly, if the market pulls back because they are fearing higher rates should benefit Visa. So I think that the thinking is just to take a little bit off. And I'll still be watching it. I'll still talk about it again on Friday and even on Monday. But I'm thinking here that I would like you to stay in it as long as you can, because it's one of the few really good-looking stocks. And I think you had your eye on the prize. Just reward yourself by feeling comfortable by taking something off, and that money will be dedicated to a pullback, so that if there is a pullback, you say yes, rather than say, oh, no. Now I'm stuck. So
right.
It's a mental thing, because tactically, I think you've really nailed it. Look how quickly it went from the July. Was it July? It wasn't even July. Look how, June, July. Yes, it was July. From the July high into that big smash to the downside, it goes 76 down to 60, round number low. That's 16 points. That's, 15%. I'm doing it quickly here. More, 18%. And all of a sudden, it's back to a new recovery high. This is so far a good-looking stock. You don't want to jump out of good-looking stocks when they are making all-time highs. Stocks that make all-time highs tend to continue to make all-time highs unless there's a big change in their revenue stream or something internally happens. So I like it. I think you've nailed it, and you told me what you'd like to do. I'm confirming that probably that's a good idea. Take something off. That's the amount that you would put back on if there was a dip into that bottom of the candle of just 5 days ago into the 74.95 area. And we will talk about it again in any case over the coming few days.
Great. All right. Well, thank you for discussing it with me today.
Thank you very much, and congratulations. Good eye. Very nice. Thank you for calling, Jennifer.
Bye now.
Bye-bye. So, folks, what we're looking at is, this is very interesting. We're looking at a bifurcated market. And what does that mean? It means that there are some stocks in certain sectors that are just roaring to the upside. And then there are other stocks that were roaring to the upside and now reverse trend. I'll show you something with tears in my eyes. I'm going to show you this one. We just nailed it perfectly. We were short Panera, at 193 round number. We did take a very nice profit. We got back in the other day expecting a bit of a pop, and it just took us out of the short side by pennies and then reversed back down. And where did it trade this morning? So remember 193, the high, last high was 199.10 at peak F in the Chapman wave. What does it do? Today, it goes down to, let me just give you the 120-minute chart here. It goes down to 186. I mean, I'm sorry, 176, I wanted to say 176. That is a 17-point decline, which we didn't take the advantage of because we were in it. And on second thoughts, I was saying to myself, maybe we shouldn't put the stop here on the new position. That should have been an add to position. And instead, I didn't play it as well as I should. And we got a profit, but we didn't get what we really should have got, which was, and now it's trading at 182. You see the bounce from 176 to 182? And that's the only thing I was considering here, that even in the, look, CMG was the one that started it off. That CMG is Chipotle, Mexican Grill, still down at the bottom after the 757 recent round number high. All-time high was 758. Chapman Wave 2-bar reversal. Remember, I was speaking about this as if it was potentially a hat-trick top, monthly, weekly, daily. Starts off with a daily, but you need to know that the monthly at peak F could do it. And lo and behold, that's kind of what happened. And Panera, we were fortunate enough to be in Panera at the time when Chipotle announced bad earnings, so we got the benefit of that. But the bounces that we've seen, even the IBB, before it really took off to the downside, the biotech sector, there were some really strong bounces to the upside. And that's the only thing I was thinking of. Question in the den. Basil, what do you estimate as your ultimate target on Visa? We're already in leg E in the monthly. That's a very good question in the sense that if you look at the 9-period exponential moving average, from the time that Visa broke above that line in the monthly chart back in February of 2011, it is only tagged the lower part of that 9-period moving average 1, 2, 3 times, and all of that occurred from April of 2014. And each time it closed either on or just above the 9-period moving average. So my suspicion is that all of that was testing to the downside. You know, I always talk about the whack-a-mole. We had a caller once who said his uncle or something was the inventor of whack-a-mole. Anyway, whack-a-mole is exactly it. But this is the opposite. You remember I spoke about the dollar years ago? Whack-a-mole, every time it tried to pop its head up, bam, 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 the Fed would keep it down. Then they controlled and kept going higher. Well, this is the exact opposite. It's like the balloon. When you go to Albuquerque, you see the magnificent balloon takeoff at the balloon festival. Well, not the balloon, it's the hot air balloon festival. It's the same thing here. It's the opposite. Look at the bonds. U.S. Look at this. This is the same whack-a-mole to the upside, push-a-mole. Every time it pulls back to the trend line support, push, 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 push. So this is a really important moment for bonds. Let me just go back to Visa, then I'll come back to bonds. So the Visa monthly is saying, not only did I use the doji candle and the August 24th smash to the downside as a propellant to the upside, but the propellant is taking it to an all-time high. And if this month can close above 76.92, the high of August, besides being really positive, it's suggesting that I could draw a trend line. And although the trend line will be coming in very soon, right there, it is quite a bit higher. And that trend line resistance would be for the month of November, somewhere going into the 80.54. But my experience has been with stocks like this, once they touch 80, they tend to go to the 83 level, maybe 85. Then they have a big pullback. The next level is the 95, 96, so they can get into the triple digits. So I'm suspecting that if Visa is able to hold and does not crack 70, which is 11% lower in November by breaking the 9-period moving average, but instead keeps using the 74s as a bounce off area, and 74.31 is the 9-period moving average in the weekly. It's looking very good. So that's the question to the Visa. I wrote down Facebook because I had a question about it. I meant to do it yesterday, ran out of time. Facebook trading at 103.89, acting really well. Is about to try to make 104. Yes, made a new by 1 penny, new recovery high. Turns out to be an all-time high. This is the one that tipped me off that there are a couple of NASDAQ-type stocks or very selective stocks like a Visa that are, in fact, starting to move up that has way more of the characteristics of a B than an F. Like I looked at MasterCard, that's the same sort of thing. And because of it, I think that Facebook is there's that Facebook chart. You see this 4-month chart pattern, almost like the Visa. So my suspicion is that fund managers are going to gravitate to these stocks that are making new all-time highs on any pullback. So I think you've got a good cushion in the Facebook Visa-type stocks for a very simple reason, that you will get the test about 3% lower, so that'll be 3 points, about 3 points at the 100. No, I'd like to make it 4%, 4 to 5% pullback on either Visa or Facebook over the coming week if there is a turn down, and that's going to be a test because if Facebook holds in the 99 area, and the market is pulling back much sharper, let's call it a 65% to 100% decline. Facebook only pulls back 65%. The market pulls back 100% or whatever the number of points is. Let's just say that happens, and you've got a much better a better run rate in Facebook, and say Visa, as other sectors start to deteriorate, then that's going to tell fund managers, hey, when we get back to this level over here, I want to be a buyer. And then if that doesn't hold, we're looking at a general market malaise, that's for sure. Facebook is getting all campaign advertising cash should go much higher. That's what Fletch says. Hey, I thought of it recently when I heard that, and then I completely forgot about it. Good point. Very good point. So, okay. So that's Facebook. So the question was from one of my subscribers, his son has this, and what are the levels that I'd be looking at? So I'm looking at 100.73 to 97.56 as the containment area if there's a turn down this week, going into next week. But Facebook is in exactly the same category of desirable stocks at this particular time that says if there is a pullback and you are looking longer term, how Facebook handles the whole area of just under 100 is going to be really important. If it breaks down and in 2 weeks' time we're looking at Facebook and it's at 93, 10 points low, 10% lower, then you have to say, if these stocks and Visa, if it's 10% low, if these stocks are down, that is not a good sign for the market. So now when I'm looking at the different sectors, I'm looking at, you remember AZO? AZO climbing again, still very strong, up 9 at 772. Looking at Orly, which comes out with earnings today. We have a plan for Orly. It's not yet implemented, but it could be implemented by the end of the day. Orly trading at 152, 261.66 with earnings reported after the bell. So I'll talk about some of this when we get. Yep, we've got time. Good. We have one more segment to go. Basil Chapman, Tiger Traditions Hour. Dow's up 103, S&P's up 14. We'll be right back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. You know what? I got a whole bunch of questions just coming in here. So here's Tim asks AZO. What is the question, AZO? How low can it go? Well, first of all, AZO hasn't given the signal yet that it's about to turn down. This is AutoZone car truck parts. It's at 772 up 9, call it up 10. So it's going to be really important because this is one of those very difficult cluster formations. I could be very strict and call it A, right there, A. And this is B, and we're in C. And that would suggest only next week will we get the D in AZO, or Friday at the earliest. So I have to wait. I have to be patient. It's 89%. I have to see whether or not it's going to make that rising wedge formation weekly chart turn down. So far, it's acting really well. All-time high. Got to be careful with stocks at all-time highs. So let's hold off on that. The next question was the TNX. TNX is the TNX. Gary wants to know. Okay. So what was the question? TNX is, and TLT. So let me do this. If you go to my long-term charts, you'll see that this is the weekly of the TYX over there, the TNX over here, and the TFVX, the 5-year. So this is 30-year, 10-year, and 5-year yields. So far, this arch formation is suggesting that if yields trading at 28.84, 2.884 right now, if there is a close underneath 27.49, we'll be going down to retest the low that was made on the 28th of August at 26.25. And if there is a close, it doesn't even have to be much. It just has to be a close above the candle of the 9th of October at 29.69. So that's 70 cents higher. If there's a weekly close above that, then all of a sudden you're looking at the potential for a move to the upside in the same W formation we've seen, or an arch formation that could take you back to the 32.55 level. So there's real clear parameters for me at this particular point. I'm suggesting that there's maybe an M, an H that goes to an M pattern if there is a rise in yields and a pullback in bonds, the TLT. So TLT, just to give you numbers, TLT right now, TLT is just stuck in the range at 123.65. A close below 121.70 says be careful. TLT is going lower, and it's going to make an arch formation. And a close, that's a close, remember, and a close in the next few days above this high right here, A, B, C, with start leg D, above 124.90. And then it'll just be stuck in the range of low interest rate, Japanization of our bond yields. I think that that's going to continue. Okay, so that was that question there. Next question running down, Sarah asks, OCH. I've never looked at OCH before, and OCH is, ouch, OCH. OCH. I thought I had it, OCH. Now I'm not getting it. I don't know why. Uh-oh, don't run out of time yet. OZM. I think you said OZM, right? OZM, what does Chapman Wave say? Chapman Wave says, wow, at 6.93, this looks like the VIX index. It is the ZIFF Capital Management. I just would have a tough time with this. At 6.93, I would need to see a whole bunch of trades above 7.32 to try to test the 7.52 level for the weekly, even to give a signal that it's ready to move higher. So be really careful. My thoughts about Apple at this particular point, Apple is acting nicely, but it's really stuck in a range. And I've been talking about this for a while. I might be wrong, but I just think Apple's kind of stuck here. It's a mature company, and it's showing that in the chart pattern. Unless Apple at 117 starts to break and close in the 122s, it really needs those 5 points up. 122s would say, wow, this is really maybe the start of something different. But up until then, I'd say just be careful. And definitely you don't want to see it close below 113. Was there another call? There was another question there. I think I did everything I need to do today. Yep. Okay. Hey, folks, thanks for being here. Have a great day. Check out my opening call, and I will be giving for my subscribers at 2:30 a quick update on what we're looking at. And hey, have a great rest of the day. Stay tuned to TFNN.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.